In 2018, Jeff Bezos, the richest man on the planet, paid $0 in federal income tax. Elon Musk? Also zero. Warren Buffett admits he pays a lower tax rate than his secretary. Meanwhile, you're probably handing over 20, 30, even 40% of your income to the IRS. How is this possible? And more importantly, can you do the same thing? Stay with me for the next 9 minutes because I'm about to reveal the exact strategies the ultra-wealthy use to legally pay little to no taxes. Welcome to Wealth Decoded, where we unlock the financial secrets the wealthy don't want you to know. I'm here to give you the same knowledge that billionaires pay tax attorneys thousands of dollars to learn. Today's topic: 7 legal tax loopholes that could save you thousands or even millions of dollars. These aren't illegal schemes. These aren't shady offshore tricks. These are 100% legal strategies written into the tax code. The difference? The wealthy know about them. You probably don't. Until now. Let's decode wealth. Loophole number 1, the Backdoor Roth IRA. Here's the problem most high earners face. If you make over $161,000 as a single person or $240,000 as a married couple, you can't contribute directly to a Roth IRA. Why does this matter? Because Roth IRAs are tax gold mines. Your money grows completely tax-free, and when you retire, you can withdraw it all without paying a single penny in taxes. So what do billionaires do? They use what's called a Backdoor Roth IRA. Here's how it works in 3 simple steps. Step 1, you contribute to a traditional IRA. There's no income limit for this. Step 2, immediately convert that traditional IRA into a Roth IRA. Step 3, your money now grows tax-free forever. You heard that right, forever. Peter Thiel, the billionaire co-founder of PayPal, used this exact strategy to turn a $2,000 Roth IRA into $5 billion, completely tax-free. Can you do this? Absolutely. Talk to your financial advisor about setting up a backdoor Roth IRA. The tax savings over your lifetime could be in the hundreds of thousands.
Loophole number 2, the buy, borrow, die strategy. This is the holy grail of billionaire tax avoidance, and it's shockingly simple. Here's the secret. Loans aren't taxable income. Think about that. When you take out a mortgage, you don't pay taxes on that money, right? Billionaires exploit this on a massive scale. Here's the 3-step playbook. Buy. Purchase assets that appreciate in value. Stocks, real estate, businesses. Borrow. Instead of selling those assets and paying capital gains tax, they borrow money against those assets at low interest rates. Die. When they die, their heirs inherit everything at a stepped-up basis, meaning the original gains are never taxed. Elon Musk doesn't take a salary. Instead, he borrows billions against his Tesla stock. He lives off those loans. He pays almost zero income tax. The same goes for Jeff Bezos, Larry Ellison, and Mark Zuckerberg. Now, you might not have billions in stock, but you can use this strategy with a paid-off home or investment portfolio. Instead of selling your appreciated stocks and paying 20% capital gains tax, borrow against them at 3 to 5% interest. Use that money to live or invest further. The wealthy have been doing this for generations. Now you know the secret. Loophole number 3, strategic charitable donations. You might think rich people donate to charity to look good. Wrong. They donate to charity to avoid taxes legally. Enter the Donor Advised Fund, or DAF. Here's how billionaires use it. Let's say you own stock worth $1 million that you bought for $100,000. If you sell it, you owe capital gains tax on $900,000. At 20%, that's $180,000 to the IRS. But what if you donate that stock to a DAF instead? Benefit 1, you avoid paying any capital gains tax. Benefit 2, you get a tax deduction for the full $1 million. Benefit 3, the money sits in the fund, grows tax-free, and you can donate it to charities whenever you want. Mark Zuckerberg donated $45 billion to his charitable foundation. Sounds generous, right? But he also avoided paying billions in capital gains taxes. Can you do this? Yes, you don't need millions. You can open a DAF with as little as $5,000. Donate appreciated stock, get the tax deduction, avoid capital gains, and support causes you believe in. It's a win-win.
Loophole number 4, real estate depreciation. This is one of the most powerful wealth-building tools in the tax code. The government allows you to deduct the wear and tear on your rental properties, even if they're actually increasing in value. Let me break this down. You buy a rental property for $500,000. The IRS says the building will last 27.5 years. So every year you can deduct $18,000 as depreciation. Here's the magic. That $18,000 deduction reduces your taxable income. So even if your property is making you money and appreciating in value, on paper, you're showing a loss. This is why Donald Trump famously paid just $750 in federal income tax, real estate depreciation. But it gets better. There's something called a 1031 exchange. This allows you to sell one property and buy another without paying capital gains tax, ever. You can keep doing this your entire life, building a real estate empire and never pay taxes on the gains. When you die, your heirs get a stepped-up basis and the tax bill disappears. Real estate isn't just about rental income. It's about legal tax avoidance. Start with one rental property. Use depreciation. Defer taxes with 1031 exchanges. Build wealth. Loophole number 5, business expense deductions. Employees pay taxes on their income before they spend it. Business owners spend before they're taxed. This is a massive advantage. If you're an employee making $100,000, you pay taxes on all of it. You might take home $70,000 after federal, state, and payroll taxes. But if you're a business owner making $100,000, you can deduct your home office, your car if used for business, your phone and internet, travel expenses, meals with clients, health insurance, and retirement contributions. After deductions, your taxable income might only be $50,000. The wealthy don't just work jobs, they own businesses, even small ones, to unlock these deductions. You don't need a massive corporation. A side business, a freelance gig, even an LLC for consulting work can qualify. The tax code is designed to reward business owners. Become one. Loophole number 6, tax loss harvesting. This is a strategy sophisticated investors use to offset their gains. Here's how it works. Let's say you made $50,000 in profit from selling stock A. Normally, you'd owe capital gains tax on that $50,000. But you also have stock B, which is down $50,000. If you sell stock B at a loss, that $50,000 loss cancels out the $50,000 gain from stock A. Result, 0 taxable gains. Hedge fund managers do this constantly. They strategically sell losing positions to offset their winning positions. And here's the kicker. You can immediately buy back a similar investment to maintain your portfolio allocation. This isn't cheating, it's smart tax planning. You can use this strategy with stocks, ETFs, crypto, and real estate. Offset your gains, reduce your tax bill, keep more of your money. Loophole number 7, moving to tax-friendly locations. Location matters a lot. If you live in California, you could be paying over 50% in combined federal and state taxes. But if you move to Texas, Florida, or Nevada, 0 state income tax. That's not a small difference. On a $500,000 income, that's over $60,000 saved every year just by changing your address. The ultra-wealthy take this further. Puerto Rico offers Act 60, which gives you 4% corporate tax rate, 0% tax on capital gains, and 0% tax on dividends. Billionaires and crypto millionaires are flocking there. Or go fully international. Portugal, UAE, Monaco, 0 income tax. You don't need to be a billionaire to benefit from this. Remote workers, business owners, investors, anyone can use Geographic tax arbitrage. The tax code doesn't care where you work, it cares where you live. Choose wisely. Let's quickly recap the 7 loopholes. 1. Backdoor Roth IRA, tax-free growth forever. 2. Buy, borrow, die, live off loans, not income. 3. Charitable donations, avoid capital gains, get deductions. 4. Real estate depreciation, paper losses, real wealth. 5. Business deductions, spend before you're taxed. 6. Tax loss harvesting, offset gains with losses. 7. Move to tax-friendly locations, keep more of your money. These aren't secrets anymore.
you now have the same knowledge billionaires pay top accountants for. Here's my question for you. Which of these loopholes surprised you the most? Drop a comment below. I read every single one. And if you want more financial secrets like this, the strategies that wealthy use but never talk about, hit that subscribe button and turn on notifications. Next video, I'm exposing the hidden banking secrets that could save you thousands every year. This is Wealth Decoded. Knowledge is power. And now you are powerful. See you in the next one.